Hello traders everywhere, Adam Hewison coming to you from the digital studios of Market Club. Well, to say it's been quite a week would be an understatement. These markets have been extraordinarily volatile, but look what's happened. At the beginning of the week we said it's over, and we still believe that. We think the trend has definitely turned in favor of the bears, despite the last couple of days' big rally. And what I mean by that, this could be the dead cat bounce we talked about on Tuesday. What I want to do, we're looking at a chart of the Dow. I want to put our Fibonacci chart indicator on there. Here's the little yellow box that always appears, and you just grab from here, scroll it down to the lows, and you can see we're in what we call thin air, between 50 and 61.8%. That's where the market should have problems. You can already see it's below the 50 line. That's going to be also a resistance. So we may jostle around this time window for a while, but the important thing to remember is this market is not so much changed for the week, because last week we closed right here. That was the close at the 50% line. So it's just a little bit higher. In fact, I would say it's probably less than 1% right now for the week, which is nothing compared to what it was last month. We were down, the Dow is already down over 6% for the month. So it's down 6% for the month of August. And remember, last day of trading is on Monday, so let's see what happens. But generally speaking, I'm not enthusiastic about chasing these rallies in this market. Pretty much the same picture in the S&P 500. Again, we're going to put our indicator on here for the Fibonacci tool, and you can see as we draw from last high up to the low, we just hit the 50% range. This is where the market's going to have problems. You can see where we closed last Friday, and it's right here, and the market's barely changed for the week. I would say it's about unchanged for the week. 1970.89 was the close, and we're at 1980, so we're up like 10 points, nothing at all. Again, the major trend, weekly and monthly, is down 75. We're below the 50 line. That's going to be resistance just right here. You see that resistance line, how it stopped the market before? It's going to stop it again, in my opinion. This is the Nasdaq, minus 85. Trend is down below the 50 line. Let's put our Fibonacci tool in again. And that got right, let's just get this correct. That got right up against the 61.8% level. And as you can see, it's just up a little bit for the week, about 1.5%. Nothing dramatic, but generally speaking, we were down 6.25% for the month, and that's the important thing. Let's see how we close on Monday, which is the last day of trading for the month, but generally speaking, we're negative on these markets, and we think they're going to go lower. This is the Eurodollar. You can see it had a nice breakout, got to pretty much where we thought it was going to go. It's pulling back now. We want to look for an opportunity to be a buyer because we've got both of our trade triangle is positive here. We want to wait till the daily turns green. We use the daily for timing. Remember, the weekly for trend and the daily for timing for currencies. We're getting back to the 50 line, which should be support right around here. So this is looking like it wants to be an area to be looking to buy this market and go long the euro vis-a-vis the US dollar. This is gold. Gold's got a lot of interaction here, but let's take a look at the Fibonacci again. We're going to draw from the highs here down to the lows, the big lows here. That's the major correction. You can see we're into the 50%, 61.8% correction zone. So somewhere between these 2 points, the market should be beginning to find support. We're looking for the daily to turn up. Remember, we use the daily for timing and the weekly for trend in gold. So you can see all of these scores, both on the euro and on gold, in our portfolio, the model portfolio that we track for you. And you can see that in the World Cup portfolio. This is crude oil. Remember, we were talking about this sort of bullish divergence that was developing right here. And you can see how the market was going down, but this is really going up. So again, we've had the big pop-up. We covered our position. And let me just show you where that we covered that position. We're short this market, and we're trading the October contract. You can see that in the World Cup portfolio. We covered that position at 40.47 right here. Let me just put the dailies in. So there's the daily, the last daily, 40.47. You can see we got short right here at 43.53. That's a $3,000 profit on one contract. We're back up to resistance on the 50 line. Let's see how that holds up. But generally speaking, that is going to be what we think is the beginning potentially of a trend, or at least in a consolidation, and saying that $38 may be the low for oil for a while to come. Let's see what happens. Going to take a look at Apple. We've had a number of questions on Apple and what's going on there. Now, first of all, Apple has a big event on September 9th. They're going to unveil maybe some new iPhones, but there's something not right here in my humble opinion. And what I want to share with you is a long-term chart of Apple, like 5 years. And we're just going to look at the monthlies alone. So if you look at just for monthlies in Apple, they don't come along that often. So there's one there. These are the cells. One there. And one here. So in a period of going back, let's say 5 years, you've had 3 exit signals. So it's very important you pay attention to these. And you can see that we've had our profitable buy signals right here. Worked out very well, very well. So this is definitely caution. Something's going on with Apple. I don't know what it is, but generally speaking, you want to be out of this market. Do not try to pick a bottom right here in Apple. Let them show you, let the trade triangles show you, and you can see that both of them are red, the monthly and the weekly saying lower, lower, lower. Let this turn around first before you get excited about Apple, because it does pay off for you in the long run if there's going to be another buy signal. Look, this has been an incredible week, historic week in the marketplace. Get some rest, enjoy the weekend. We'll be back here next week looking at the markets and seeing if we can find some winning trades for you. I'm Adam Hewison from Market Club. Have a great trading day and a great weekend, everyone.